Good morning. This is Jared with the Helton Group at Loan Depot, and today is July 8th. It's Friday. Hope everyone had a good 4th of July. We're going to talk about the mortgage market. So the mortgage market last week has been pretty volatile. It's actually dipped down to probably some of the lowest levels in a little while, and in the last couple of days, it's kind of fueled where it's kind of gone up, and that's on some mixed news. So what you're going to see here is the Atlanta Fed revised their GDP, which actually is negative for their estimate. So if that comes true, that would mean 2 quarters of declining GDP, negative GDP, which would mean a recession. Home prices barely rose in May. No surprise there. You're all feeling it with the price adjustments, or also called reductions in some markets. Applications were down. No surprise. The jobs report came out. It was actually solid, but there's some mixed news in it. So what that will probably do is it'll give the green light to the Feds where they can increase interest rates by 75 basis points, because it sounds like it's positive, even though that's just really an estimate when they do that jobs report, because it's based on a polling system that only like 60% of people respond. So it's not a real accurate measure because it gets revised every single month. So what we got in rates, so rates over the last 3 days, as I mentioned, they've kind of come down a little bit, but they're kind of spiking back up the last 2 days. For the last 2 years, they're still kind of towards their highs. 5 years, they're certainly at their highs. And then same loan scenario that I do, it's a 20% down conforming loan, $400,000 purchase. You've got the payment would be $23.69, which includes like modest tax and insurance, and then that rate would be a little over 6.125, and that's without paying points. But paying points have become a little bit more popular now. As you can see, week over week, it's up. What is that? $27 or something like that. So if you wanted to buy down your rate, it's actually a pretty good time where a lot of customers are doing that, because you see a big difference. If you look between 6 and an eighth all the way down to 5.65, you break even in 29 months, and that costs about a little under $3,000. So you're seeing the return of a lot of people paying points for loans, because it's probably more psychological, where it feels good to get a lower interest rate. I'm not really sure if the math really works on that, because a lot of people probably going to be refinancing out of that. But anytime you can break even in 2.5 years, I'd say that's probably a really good investment compared to most. So home prices, your buying power, $400,000 this week. Last week would have been 406, and last month it would be 410. But we go all the way back a year from now, it was $525,000. So if you've got anybody that's waiting for the market to crash, as you know, there's still not a supply and demand. At some price points, you're seeing some price adjustments, but really, it's really not that big. So back to the rates when it comes to what the top song was. I think the year was 1992, a good year, and we got Sir Mix-a-Lot maybe got back at 8.25%. So as always, if you have any questions over the weekend, you can always reach out to any of us. We greatly appreciate working with you, and I hope you have a good day. Talk to you later.